And that's just one out of like five things I look out for, because you have some big companies in Nigeria that are crap. I would never put my money in another company in Nigeria. Let me just tell you that. And they are big, right? So some key things you look out for. So for instance, one, what's the size of the company? And when I say size, I'm not saying how popular is it. I'm saying in terms of the assets that it has. Does it have like up to 50 billion naira in terms of assets? Right. I think that used to be my benchmark then. I think it needs to go up now actually, because the exchange rate has devalued. Because really, I was converting from dollars. I think the metric I used to use was $100 million. But the thing is, you want to know that it's a solid company. That even if it crashes today, that money is not all those, as I said, they are not going to evaporate. Someone will have to buy it, even if they say, oh, the company has collapsed. They will still sell all those assets. That 50 billion naira has to go somewhere now.
So what is this information that you're able to have access to?
So the beauty of investing in the stock market is all this information is available. It's public. Right. That's why they call them publicly listed companies. So they have to put out all that information, and their accounts and all their books have to be audited every year, right? So before they can, I think some of them even audit them every quarter. I'm not sure, but I know at least every year you have to put out financials that are fully audited. Meaning you can't just put out rubbish there and say, oh, we are $1 billion. No, you have to some group of accountants would have gone through all your books to verify it. And that's just one out of like five things I look out for, because you have some big companies in Nigeria that are crap. I would never put my money in another company in Nigeria. Let me just tell you that. And they are big. So the size alone is not enough. But that is one. Right. The other thing I would look for is, have they been making money in the last 5 years? Not share price. So I don't even look at. I'm not talking about the share price. I'm talking about the company itself. Have they been declaring profits? Because your share price can be going up, meanwhile you are losing money. All these American companies, the Tesla and all them, some of them were not making money, but their share price was going up. Yeah. Meanwhile, they were not making money. People were just hoping and praying that, oh, this company will do well, this company will do well. Meanwhile, it's not making money. Twitter, I'm not sure, but I don't think Twitter has started making money, but share price has been moving. So I don't invest in companies that are not making money. They need to be profitable today. Not they will be profitable tomorrow. I'm not saying I'm not your father-in-law. I'm not trying to sponsor your business. It's father-in-laws that sponsor business like that. So that my daughter's husband will have something to do.
Your father-in-law, you're watching this.
No, I don't do that kind of thing. We must be making money today. So that's the second thing I look for. Then the third thing I look out for is, okay, you're a big company, you are making money. Are you paying dividends? This is where my own strategy sort of deviates from other people's strategies, because some people don't really care about dividends, because typically companies that pay dividends, their share price, okay, let me leave Nigeria. When you're looking at the London Stock Exchange or US Stock, New York Stock Exchange, most of the companies that pay dividends, their share price doesn't go up, because they're taking out of their profits to pay investors some money. So share price may not go up like that, but I don't mind. I like it. Let me collect my money now. So I prefer, I look at their track record in the last 5 years. Have they been paying dividends regularly? Right. So they've been making money. They've been making enough money to pay investors part of it. Right. So that's something else I look out for: consistent dividend payments. And then I now look at, before I now start looking at the price. And when I now look at the price, then that's where you now start getting a bit more technical, because you now need to get certain ratios, like, oh, what's the price to earning ratio and all that. But all those things, again, all this information is available. It's just, knowing where to find it. But it's available. It's available on the internet, right? It's publicly available.
Just even knowing to look for it, not even just where to find it.
Yes, so exactly. So now at least that's why I said picking the right stock is a whole training on its own. But it's actually easy. It's just that you just need to learn certain that a lot of these things are things I had to learn by myself over the years. And one thing I found out is a lot of that information is now so readily available. It used to, some 5 years ago, it wasn't this easy to find a lot of those things. But now there's a website that I can just go and get all the information once.